Hi and Assalamualaikum. I will start the presentation with the introduction. Basically, for this part, I will explain briefly about what is GST and what is SST. Firstly, I will explain about GST. What is GST and who is created in? Goods and Services Tax (GST) is a multi-stage tax on consumption of goods and services. In some nations, it also referred to as a value-added tax. It will take the place of the existing service tax and sales tax. In Malaysia, GST is applied to all taxable supply of goods and services with the exception of those that are expressly excluded. On the 25th of October 2013, Malaysian Prime Minister Datuk Seri Najib Razak announced the introduction of the Goods and Services Tax, which is GST, in the budget 2014 to replace the current Sales and Services Tax. GST will be effective in April 2015. So what is the rate of GST that will impose? The standard rate of tax is currently fixed at 6% on the taxable supply of goods and services or on the importation of goods as gazetted in the Goods and Services Rate of Tax Order in 2014. Further, certain classes of goods and services are subject to zero rate, which is 0% of GST. So next, who can charge and collect this GST? So, a person who is registered under the Goods and Service Tax Act 2014, GST Act 2014, known as GST registered person, is required to charge GST, which is output tax, on his taxable supply of goods and services made to his customer. The GST Act 2014 requires MIB as a GST registered company to charge GST on its taxable supplies of goods and services. Next, what does GST work? Businesses making taxable supplies have to be registered under GST if their annual sales turnover has exceeded the prescribed threshold. Only a registered person can charge and collect GST on the taxable supplies of goods and services made by him. So GST is charged on the value or selling price of the products. So the amount of GST incurred on input, which is input tax, can be deducted from the amount of GST charged, which is output tax, by the registered person. So if the amount of output tax is more than the input tax in the relevant taxable period, the differences should be remitted to the government. However, if the input tax is more than the output tax, the differences will be refunded by the government. So we move to the next, which is what is SST. SST refers to the Malaysian Sales and Service Tax, where a sales tax is imposed at the manufacturer level and a service tax is paid by consumers who are using taxable services. Tax regulations are relatively flat in Malaysia compared to neighbouring regions, which can make compliance challenging to maintain. This is why many growing business partner with a corporate services team who can help them navigate multi-country taxes as they evolve. Implemented since September 2018, Sales and Service Tax (SST) has replaced GST in Malaysia. The SST consists of two elements, which is sales tax and service tax. Sales tax is a single-stage tax imposed on taxable goods manufactured locally and sold by a registered manufacturer and on taxable goods imported into Malaysia. So how does SST works? Firstly is from sales tax. The sales tax component of SST is imposed on products manufactured and produced locally and on taxable goods imported into Malaysia. It is charged to consumers based on the purchase prices of certain goods and services. The sales tax is only imposed at one stage of the supply chain at the time of the goods sale or disposal. The sales tax rates in Malaysia range from 5%, 10% or another specified rate depending on the type of goods. Your business is required to pay SST if your total sales value of taxable goods has exceeded RM 500,000 in the past 12 months. Second is service tax. The service tax is a consumption tax imposed on taxable services provided in Malaysia by a registered business. The rate for service tax is 6% in Malaysia. Business is required to pay SST if your total value of taxable services within 12 months exceeds the prescribed threshold, which is usually RM 500,000. So that some services have a different threshold. For example, the threshold for operators restaurant and cafes is 1.5 million. So that's all for me. Thank you.
Hi, my name is ELYN OMAR and I will continue to talk about the advantages and disadvantages of GST and SST. The first advantages of SST is it can potentially lower compliance costs. SST systems are often simpler and more manageable for smaller businesses. SST typically has easier documentations and reporting requirements, which can lower compliance costs. SST may not require as much advanced technology for businesses to meet their tax obligations, allowing them to focus more on their main activities and potentially boost economic growth. Second advantage is flexibility. SST system gives governments the flexibility to choose which goods and services they want to tax. This allows them to adjust taxes based on economic needs. For example, they can lower taxes on essential items to encourage spending during tough times, or raise taxes on luxury goods to increase revenue. This adaptability is especially useful during economic ups and downs, helping governments respond effectively to changing conditions and support specific industry or sectors. But SST can also have disadvantages, such as narrow tax base. SST system usually apply taxes to fewer types of goods and services. While this simplifies the tax system, it can lead to less government revenue. To make up for this, the government might raise tax rates on the items that are taxed under SST, potentially increasing prices for consumers. This means policymakers need to find a balance between a simple tax system and having enough money to fund public services. Another disadvantage is complexity and potential for evasion. SST system can be complicated because they involve different tax rates and rules for different goods and services. This complexity can make it challenging for businesses to apply the correct taxes and for consumers to understand the tax on their purchases. It also opens the door for potential errors, misunderstanding, and even tax evasion. So, governments need strong monitoring and enforcement measures. The advantages of GST. GST can reduce cascading effect. It is because GST only taxes the added value at each stage of production, unlike traditional sales tax that tax the total value. This prevents taxes from piling up, making the system fairer, more efficient, and lowering the final cost for consumers, while also promoting transparent and smooth business operations. Secondly, GST have potential boost to economic growth. By combining various taxes into one system, make it easier and cheaper for businesses to handle taxes, leading to potential savings. This encourages business growth, innovation, and job creation. Additionally, it can attract foreign investors and improve a country's global competitiveness due to its transparent and predictable tax structure. But GST also have initial implementation challenges. Introducing GST can be tough at first, especially for smaller businesses. They may need to update their system, train staff, and deal with uncertainties about taxes. This can cause short-term disruptions, but in the long run, the benefits of GST outweigh these initial challenges. Another disadvantage is technology dependency. For GST to work well, a strong technology setup is essential. This means having advanced software for tasks like tax calculations and compliance. Places with limited technology resources might struggle with GST, causing problems for both the government and businesses. To fix this, governments need to invest in better technology to support GST and help everyone, from big corporations to small businesses, use it smoothly.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURSYAHIRA and I'm going to explain about the effect on revenue of GST and SST. I'm going to explain about the effect on the revenue first. As compared to 2017 before the GST was abolished, the figures stood at RM44 billion, while under the SST system, the Malaysian government collected an estimated revenue of 26.7 billion and 37.9 billion in 2020 and 2021 respectively. Next, on the year 2016 is a whole year which GST tax had taken over and collected 58.54 million and spent most of the revenue on the same component in the year 2014, except the amount had reduced in supplies and services, other expenditure and subsidies, but have increased in emolument, while on the year 2014, which is SST tax was still on duty, had collected 38.798 million and spent it most to emolument, supplies and services, subsidies, and other expenditure and economy.
Next is the effect on goods and services. SST led to lower prices for some goods and services. Prices of items would decrease if the sales tax was based on the previous tax rate up to 10%. The sales tax is based on the cost of manufacture or importation. Consumer items including movie or concert tickets, electronic devices such as laptops and mobile phones, skincare products, makeup and apparel were not subject to taxes during the preceding SST period. Also, when it comes to property prices, construction services and building supplies will not be subject to the sales in services tax SST. While prices in Malaysia rose during the GST regime as a result of merchants raising their prices to protect themselves against the unpredictability of the new tax. In addition, dishonest dealers raised prices by capitalizing on the unpredictability of the circumstances. Therefore, it is untrue to say that price rises were brought on by the GST. It's a prevalent belief that if GST is revenue neutral, it will likely have a significant impact on pricing until the tax base is significantly altered from the previous tax base. Short-term price increases brought on the GST would result in lower customer demand for products and services because of the higher cost. Additionally, because the GST has a larger base than the SST, certain prices will often rise in the near term. However, as the inherent cost of the prior tax on company inputs are eliminated, prices for products and services should eventually decline.
Assalamualaikum warahmatullahi wabarakatuh. My name is NABILAH binti HAMEDE and I will present about this will be the comparison with SST. The GST tax system was more efficient. Why? Based on Dr. Apurva Singh, which is the World Bank lead economist from Malaysia, he has been mentioned that tax evasion and leakage will be reduced with broader tax implementation, with known as GST. This will be increasing government revenue. Other than that, the given that value added tax VAT regimes is similar to GST have been implemented in the more 170 countries in nationwide. We believe that GST is too preferable to SST. Next advantage is the goods and services tax. GST is higher than the current sales and services tax SST when it comes to financing the government. This is because in our economic of Malaysia, 60% of tax is come from tax of consumption. So the consumption for daily basis we can get is easier in GST. And not more just than that, our expert already mentioned that if GST implement for the last year, we can make 90 billion ringgit Malaysia more in tax revenue for the implement of GST. Instead of the SST, we could got more less than the GST. Not just that, we have proved that our current Prime Minister, Datuk Seri Anwar Ibrahim, agree that GST is better than SST.
Datuk Seri Anwar Ibrahim mengulangi pendirian bahawa cukai barangan dan perkhidmatan GST merupakan sistem cukai yang sangat efektif.
And I said it publicly. GST is the most efficient, transparent tax system. Right.
Last, based on our explanation, we can conclude that GST is more better than SST because of GST could get more revenue than SST, and it should be good to our economic development. And not just more than that, we can back to the society when we get more revenues than from the GST implementation.
The Malaysian government has shifted the nation's tax structure through the introduction of SST and replacing GST. The goal of the GST repeal was to provide Malaysians, particularly those with lower to moderate incomes, more purchasing power. Many people thought that the introduction of GST resulted in higher living expenses. However, the enforcement of GST tax proved to bring many benefits compared to the SST tax. GST is better in terms of lowering cascading effects and improving Malaysian economic growth. Since the invoice credit method lowers the cost to the customer, the cascading impact can be greatly reduced under the GST system. GST helps in enhancing economic growth domestically and internationally by stimulating investment. As we can see, during the 2016, under the GST enforcement, Malaysia collected total revenue of 58,054 million, Therefore, the government should revise again whether the enforcement of GST or SST is better for Malaysian economy in future.